Aya Gold and Silver has released their third quarter financial results. And while they managed to set a series of new records this quarter, including record production, record revenue, and record net income, just to name a few, the company looks like they might still fall short of guidance provided earlier this year. And to top it off, while grades are improving, things aren't exactly where they were originally forecasted to be post Zgounder expansion. But doesn't matter, let's dive in. Aya Gold in the third quarter posted top-line revenue of $54 million, a new record for the silver producer, and a massive 393% improvement on a year-over-year basis from the $11 million in top-line revenue recorded in the third quarter of 2024. That being said, the third quarter of last year was deemed to be a transitional quarter, with the Zgounder expansion set to come online shortly thereafter. That revenue figure follows the sale of 1.4 million silver ounces for the company, versus 400,000 ounces in the third quarter of 2024. On top of the per ounce boost, average net realized silver prices were up 46%, climbing from $27 to $40 an ounce, further bolstering revenue growth. While revenue jumped by 393%, cost of sales climbed at a slower pace, growing by 260% year over year from $9 million to $33 million, leading to an expanded gross profit, which climbed an eye-popping 1,038%. In dollar terms, gross profit jumped from $2 million to $21 million. Operating income, meanwhile, moved from a loss of $3 million to positive $15 million, while Aya transitioned from a net loss of $260,000 or 0 cents per share to a net income of $12.4 million or 9 cents per share on a year-over-year basis. Operating cash flow, meanwhile, moved from negative $11.7 million to positive $22 million, with Aya ending Q3 with cash on hand of $129 million versus $114 million at the start of the quarter. Working capital stood at $96 million. Moving to the operations side of things, Aya in the third quarter saw substantial improvement operationally, at least in terms of tonnage. Ore mined nearly doubled from 121,000 tons to 215. However, average grades mined dropped from 148 grams per ton to 142, with that figure said to be a mix of underground material averaging 159 grams per ton and open pit material that averaged 123. Ore processed, meanwhile, jumped from 83,000 tons to 306, with average grades processed falling 9% year over year from 161 to 146 grams per ton. However, Aya is quick to highlight that grades improved on a quarter-over-quarter basis from 140 grams per ton. The bright side for Aya investors here is that recoveries did improve, moving from 83% to 92.5%, while milling operations improved from 906 tons per day to 3,300. Post-quarter end, milling operations are said to be running at about 3,700 tons per day. Cash costs, meanwhile, have come down on a year-over-year basis, dropping from $23.47 to $20.79 an ounce. While positive, things are still falling short of prior estimates. Under the feasibility study for the Zgounder expansion published in 2022, the mine was expected to post average processed grades of 257 grams per ton, with the current 146 gram per ton silver grades falling far short of that figure. While recoveries have improved versus estimates, 92.5% compared to an estimated 91.3%. Costing is also nowhere near expectations, which had called for cash costs of just $7.36 an ounce. And current guidance for 2025 isn't shaping up to be much better. Guidance calls for 5 to 5.3 million ounces of silver production. Year to date, Aya sits at 3.46 million. And they'll come up 200,000 short if they simply replicate the record Q3 production results, meaning they'll need to dig even deeper to meet current estimates, which might be possible given the rising milling rates, but it still isn't looking all that optimistic if we're being honest. Cash costs, meanwhile, were forecasted to be $15 to $17.50 an ounce. And with year-to-date cash costs of $20.38, that figure is nowhere near being achieved. Same goes for average grade guidance, which called for 170 to 200 grams per ton material, versus the actual year-to-date figure of 149. In fact, the only guidance items they seem to be on a path to meet or exceed is recovery estimates, which called for 84 to 88% recoveries, versus the current year-to-date figure of 87.4%, and estimated exploration and development expenditures, which sit at $22 million year-to-date versus guidance of 25 to 30. All right, so let's wrap it up. Aya's third quarter is probably best defined by the term mixed bag. Financially, they hit some records, but operationally, things are coming up a bit shy of Aya's own imposed expectations, which might explain why the equity sold off about 2% on the day post earnings release. That being said, at least some progress is being made towards improving operations. And we'll have to see how things shake out once ramp up is fully completed at the Zgounder expansion. All right, everybody, thanks for watching. As always, if there's stories you want us to cover, let us know in the comments section. We are in the thick of earnings season, so if you want earnings videos on mining companies, check out our channel. And if you want more mining content, check out our website over at thedeepdive.ca. Also, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thank you for watching.